Welcome to Accounting Year YouTube channel.
Hello. Today we want to talk about fixed asset register and asset movement schedule. I once underestimated this until a friend of mine asked me what it was, and I found out that not a lot of people can differentiate between the two and when each of them is applicable. Right. So now, first we need to understand that an asset register is just a list of all assets owned by the business. Right. It provides as much information about assets that the business owns as much as possible. In short, it's like a detailed list. So every single asset that meets the criteria of being capitalized is captured on an asset register. Now, the key thing about the asset register are one, you need to have a unique identifier for each asset so that that number represents that asset wherever you see it. And that key thing is usually there are classes of assets. Maybe there, may not be there. Some businesses have done it so that with just by looking at the asset reference, you can tell the class of assets a particular asset is located. The next is the description of the asset, right? This uniquely defines what the asset is and gives you some level of information about the asset. So some people try to put the name of the asset. It was a vendor that supplied that kind of asset, or a manufacturer, they try to include that in the name. Some form of very descriptive, or if it's a computer equipment, which user is using it within the company, right? Then the date was capitalized, the cost, the current period depreciation. So if we're in year 2019, the depreciation that that particular asset has suffered, then the accumulated depreciation, which is depreciation that the asset has suffered throughout the lifespan, then you have your net book value. Some businesses may actually have something like location. Now, the idea about this is that when you're carrying out a fixed asset verification, you can usually tell where an asset is in the company's premises, right? And that could help you a lot. Now, one key thing is that the total value in your asset register should tally with your GL balance. Limitation is that you should be able to reconcile these totals to your general ledger and your trial balance, right? Not just that, you should be able to reconcile it on a GL by GL basis. What I mean, I will explain in another class where we'll discuss reconciliation of your asset register with the GL. Now, the next I'll talk about is the movement schedule. The movement schedule is actually a required disclosure in your financial statement in line with IFRS, whereby you have your comparative and you also have your current period disclosure. Some attributes, this is not all, but this suffices for the average business. You have cost and you have accumulated depreciation, right? Within cost, you have opening, you have addition, you have disposal, and you have transfers. Your opening here should agree with your audited financials for the previous year. If the business is more than a year in business, right? So that means there's a prior year number. Now, the line called additions here should tally with the total additions in the period. That's the check for this. Now, your disposal, if you have a disposal schedule, right, this should tally with your disposal. And your transfers should be within from your assets, your WIP, which is your work in progress, or your asset under construction, and wherever it has been classified to. At the end of the day, the total in that column must be zero. It should not have a residual balance, otherwise something is wrong with your transfers. Now, based on the nature of the business, you have different classes of assets. All your classes of assets must be represented in the movement schedule, meaning that it's not possible for you to have a class and it's not represented here. Then it's something missing. Now, you also have your accumulated depreciation where you have your opening, same here. You have your depreciation for the period. This should also agree, your opening balance should agree with your audited financial statement. This should also agree with your depreciation for the period. Otherwise, something is wrong. This, your disposal schedule. And this line should agree with disposal schedule. I'm sure you would notice that there is no depreciation in your work in progress. The idea is that your work in process is not available for use. So as a result, you should not have depreciation here. The moment an asset can suffer depreciation, then it shouldn't be in this column anymore. It should have been transferred to the appropriate category. So assets under this category do not suffer any form of depreciation, which is the one thing you need to take note of. Now, this is a dicey one. Within your land, if you notice, there's no depreciation here. Now, in some countries, depending on the nature of the land, right, it could actually suffer depreciation. I know we're used to the fact that we see land doesn't suffer depreciation, but if it's a leasehold land, right, then it should suffer depreciation because that means that right, you have title to that to that land for a period of time. As a result, it should suffer depreciation over the period for which you have title for it. So if in Nigeria, the federal government owns all land based on the Land Use Act, right, and you have it for 99 years. Based on that, you should actually be suffering depreciation. However, most people don't do that, right? But that's a controversial topic. But that's the case. Now you have your closing balance, which should be the sum of everything you have here, everything you have here, and everything you have here, and all the way down. This is your opening net book value, which is basically your opening land less your opening accum dip. Same applies to NBV, closing NBV or closing cost less closing accumulated depreciation, and that all the way here, and gives you your total. Now, as a check, this also must agree with your all the lines that make up your fixed assets, your PP, and this should be the figure that should be disclosed in your financial statement. So this can be your comparative number, and this can be your current period number in your financial statement. I look forward to hearing from you. I hope this has been able to add some value on your understanding of the two and how they differ in terms of what they are.